Hello, I'm Tammy Green, and this is your Week in Forex from MaxiForex. Today we will review last week's market highlights with financial analyst Martin Smith. The United States and Japan held their interest rates, which has led to declines in the USD and the JPY, since investors are seeking higher yielding assets. Yet the euro was unable to sustain its 5-week high at 138 due to further speculations about the debt issues in Greece. Germany and France are clashing over the best way to handle this issue. Germany is proposing that Greece should seek the support of the IMF and not the European Union. This is all in all causing a lack of confidence and ultimately weakening the euro. Speculation about Italy, also going the way of Greece, Portugal, and Ireland, is fueling doubts about the European currency. Now we will discuss these and other hot topics with Martin Smith. Welcome, Martin.
Hi, Tammy.
So it seems that the euro is taking a continuous beating over Greece's debt problems. Is there any real solution in the near future?
Well, as we know, of course, members of the EU are pretty split as to how to handle the growing problem of Greek debt, mainly France and Germany. Spokesman for the German Chancellor Angela Merkel is advising that Greece should utilize the International Monetary Fund to get out of its dire straits. And Germany believes that nobody apart from the IMF has the instruments to restore Greek capital markets access. Now, the IMF is an international organization comprised of 183 member countries that has many functions. But in Greece's case, they'd be used to provide temporary financial assistance to countries in need. However, France's Prime Minister, Nicolas Sarkozy, made a much more committed statement, assuring the Greek Premier a week ago of France's support.
So what will be the ultimate outcome here?
Well, it's hard to know for sure what the EU will decide, but I can assure you that while they debate the issue, investors are becoming more and more wary, and we see the US dollar gaining. I mean, we're seeing the European currency falling versus 13 of its 16 major peers. We can expect to see a stronger dollar and weaker euro over the next few months. Now, it may break through the 136.50 point, which would signal a move towards the 134 level or even beyond. But also there's now speculation of problems in Italy with debt issues. The euro may be facing a rather bumpy road ahead.
What do we know about the status of Italy right now?
Well, Italy is holding a very high level of debt with no certain prospect of real growth and a leader who is currently surrounded by scandal. However, Italy is not Greece, of course, mainly because of the high levels of private savings, high tourism, iconic brands, and their prudent fiscal management during this global recession. In fact, ratings agency Fitch have indicated that Italy's rating of AA is stable for now. Now, one big reason is despite their current economic struggles, their borrowing costs are not as high as other struggling economies.
There is talk that the loonie is quickly approaching parity with the greenback. Now, why would this be a concern for Canada's economy?
Well, the problem is that it is getting too strong too quickly. Canada's playing down these concerns now, though the industry minister, Tony Clement, said last week that productivity gains should more than overcome the effects of this fast-growing currency. Now, this is a strong reversal from what we have heard said in the past 3 years from Canadian officials. Last week, the loonie reached its strongest position against the US dollar in almost 20 months.
What has helped push this big gain for the CAD?
Well, this currency has gained a whopping 6% in the past 3 months, partly because of Canada's plan to erase its budget deficit by 2015.
There is talk that a rise in the Chinese currency, the yuan, would be bad news for China. Can you explain this to us a little bit?
Well, the China Council for Promotion of International Trade was checking with more than 1,000 exporters in 12 industries on whether they could cope with a stronger exchange rate. Now, if the yuan does rise, many companies will face, they face a risk of going under, since their profit margins are dangerously low. Now, this would be disastrous, of course. So the US is putting pressure on China to allow their currency to appreciate. If not, there are threats to slap duties on Chinese goods, and this may actually be counterproductive.
Why so?
Well, I don't believe retreating to foreign pressure is something we can expect from China.
I can see what you're saying there. So are there any hot technicals this week?
Well, I'll go over the US dollar, I think, the euro dollar. On the daily chart, the pair formed a rising wedge pattern within the context of an overall downtrend. This extended from the early December high and succeeded to break the bottom line of this wedge, which is considered actually a very bearish signal. Now, this rising wedge occurs after price is rejected by the 138 resistance. And in the event of this strong bearish breakdown that would lend strength to the robust prevailing downtrend, a key support target to the downside resides in the 134 price region. Now, any further breakdown below that level would lend confirmation to an overall downtrend continuation. Now, on the upside, the noted 138 price region should continue to serve as resistance within the context of the current downtrend.
Well, thank you, Martin, for joining us once again. Until next week, be sure to visit us at MaxiForex.ru.